Hello everyone. Welcome to the Stock Minds web channel. In the ever-evolving Buy Now Pay Later (BNPL) Fintech space, Sezzle, Nasdaq SEZL, has quietly been delivering standout growth and turning the corner toward profitability. With Q3 2025 results revealing significant year-over-year leaps, the stock appears to be at an interesting inflection point. High growth meets improving fundamentals. In this video, we will dive into Sezzle recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Sezzle. Sezzle is a fintech company specializing in buy now, pay later, and digital payment solutions, allowing consumers to split purchases into manageable installments. Founded in 2016 and publicly listed in August 2023, Sezzle connects millions of shoppers with a wide range of merchants through its platform. The company emphasizes responsible credit use and financial empowerment, has rapidly expanded its user and merchant base, and successfully transitioned into profitability, setting itself apart from many loss-making fintech peers. Sezzle financial performance. Sezzle reported outstanding quarter, demonstrating strong growth in both revenue and profitability. For Q3 2025, the company generated $116.8 million in revenue, up 66.95% from $69.96 million in Q3 2024. Earnings per share, EPS, also rose sharply to 75 cents, an increase of 70.45% from 44 cents in the prior year quarter. On a trailing 12-month TTM basis, revenue reached $418.63 million, representing an 88.74% increase from $221.81 million in Q3 2024, while EPS surged to $3.24, up 104.61% from $1.58 a year earlier. Free cash flow per share, TTM, strengthened to $1.57, growing 124.29% compared to 70 cents last year, reflecting Sezzle's ability to generate solid cash returns from its operations. The company's profitability metrics remain robust, with a gross profit margin of 71.65%, net profit margin of 27.66%, and free cash flow margin of 13.37%. Sezzle also boasts exceptional efficiency, recording a return on assets of 48.9% and a return on equity of 107.03%, supported by a healthy debt-to-equity ratio of 0.76. Over the past 5 years, Sezzle has grown its revenue at a 51.2% CAGR, while net income and free cash flow turned positive in 2024 and continue to grow rapidly. Sezzle has proven to be a fast-growing company in the past and is still projected to maintain strong growth in the future. Sezzle Fiscal 2025 Financial Forecast. Looking ahead, analysts forecast 2025 revenue of $449.16 million, representing a 65.66% increase from 2024's $271.13 million, and project non-GAAP EPS of $3.38, an 83.36% improvement from $1.84 in 2024. Wall Street analysts have assigned Sezzle a strong buy rating with an average price target of $108.50, implying an 83.15% potential upside, and the highest price target reaching $202, suggesting a 241% upside potential from current levels. SEZL, stock price performance and valuation. At the time this video was created, the stock was trading at $59.24 per share. Sezzle has delivered outstanding performance, gaining 41.9% over the past year and significantly outperforming the S&P 500's 12.6% increase during the same period. Since its listing in August 2023, Sezzle's stock has surged 338.3%, far exceeding the S&P 500's 53.7% gain, highlighting the company's strong growth trajectory and investor confidence. Despite this impressive rally, Sezzle's valuation remains attractive relative to its fundamentals. The stock trades at a price-to-sales PS ratio of 4.79 and a forward PS of 4.5, which are reasonable considering its rapid revenue growth and high profitability. Its non-GAAP price-to-earnings PE ratio stands at 18.92, with a forward PE of 17.53, suggesting the market has not fully priced in future earnings potential. Meanwhile, The price-to-free cash flow (PFCF) ratio is 36.15. Based on Fiscal.ai data, the forward PS and forward PE ratios have been below the average since 2024. This indicates potential undervaluation, as Sezzle is still projected to grow rapidly in the coming years. Sezzle growth potential. Sezzle growth potential remains strong, driven by several factors. 1. Record gross merchandise volume achievement and transaction frequency growth. Sezzle achieved a historic milestone by surpassing $1 billion in quarterly gross merchandise volume (GMV) for the first time in Q3 2025, reaching $1,047.3 million with 58.7% year-over-year growth. This achievement demonstrates the platform's capacity to scale and its resonance with consumers during a challenging macroeconomic environment. Equally significant is the acceleration in consumer purchase frequency, which increased to 6.5 times in Q3 2025 from 5.4 times in the prior year period. This metric reveals that Sezzle customers are not making occasional purchases but rather integrating the platform into their regular shopping habits, indicating strong product-market fit and increasing consumer reliance. The combination of transaction volume growth and frequency improvement signals sustainable business expansion beyond one-time user acquisition, positioning Sezzle to capture a larger share of consumer spending over time. 2. Subscription-led profitability model with superior unit economics. Sezzle's shift to subscription products like Premium and Anywhere has transformed its profitability and unit economics. Subscribers place about 10 times more orders than non-subscribers, with the top 10% making an outstanding 36 orders in 90 days. By Q3 2025, Sezzle grew its monthly on-demand and subscribers (MODS) base to 784,000, driven mostly by subscriptions rather than lower-margin on-demand services. This pivot fueled strong financial results. Net income hit $26.7 million, with a 22.8% net margin, and adjusted net income rose 52.6% to $25.4 million. Marketing resources focus more on subscriptions, signaling confidence in their higher lifetime value, retention, and payment behaviors. This evolution positions Sezzle for ongoing profitability and expanding margins as its subscription base continues to grow. 3. Strategic market positioning within the expanding BNPL ecosystem. The global Buy Now Pay Later (BNPL) market is projected to grow from $560.1 billion in 2025 to $911.8 billion by 2030, at a 10.2% compound annual growth rate. Sezzle stands out in this expanding market by focusing on short-term credit with a 42-day payment plan, enabling quicker portfolio turnover and better credit risk management. In Q3 2025, Sezzle expanded its merchant partnerships by adding premium retailers like Cato Fashions, Scheels, Dermstore, and entered digital content via WAP. Early data showed Sezzle customers at Cato Fashions nearly doubled the retailer's average order value, proving the platform's merchant value. As BNPL gains adoption, especially among Gen Z and millennials favoring flexible installments over credit cards, Sezzle's market presence and innovative model strongly position it to capture ongoing growth in this segment. Risks to consider. While Sezzle stock looks like a compelling investment opportunity, we should be mindful of potential risks. 1. Industry competition. Sezzle faces intense competition in the crowded Buy Now Pay Later market, competing with dominant players like Afterpay, Affirm, and Klarna. This rivalry puts pressure on margins and poses risks of losing market share, especially as larger competitors hold significant portions of the BNPL landscape. With Sezzle's smaller scale, maintaining growth and relevance requires navigating this competitive landscape carefully to avoid margin compression and shrinking user adoption. 2. Regulatory changes. BNPL providers, including Sezzle, face rising regulatory scrutiny primarily from agencies like the Consumer Financial Protection Bureau, CFPB. New rules slated for around 2026 will require stricter creditworthiness and affordability checks to protect consumers, leading to higher compliance and operational costs. Non-compliance risks fines and penalties, which could cut profitability by 10 to 20%. These regulations aim to balance consumer protection with industry innovation, but may increase costs and reduce growth momentum. 3. Market conditions. Economic factors like inflation and recession risks play a crucial role in shaping consumer spending habits and influence loan default rates, which are vital to Sezzle's revenue and financial health. Inflation can reduce consumers' disposable income, while recession fears may cause caution in spending and borrowing. These factors collectively impact Sezzle's credit loss provisions and overall stability, making economic conditions a significant risk to monitor for sustained performance. Conclusion: Sezzle stands out as a high-growth fintech company that has successfully transitioned to profitability while maintaining impressive revenue and earnings momentum. With strong financial performance, expanding margins, and robust analyst forecasts, the company continues to demonstrate significant growth potential. Despite its strong share price gains, Sezzle's valuation remains attractive relative to its fundamentals. Supported by increasing consumer adoption and operational efficiency, Sezzle appears well-positioned to deliver long-term value and remains a compelling investment opportunity. But remember, this is not a financial advice. What do you think about Sezzle? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching, and see you in the next one.